Good morning, everyone, and thank you so much for taking the time to be here today. My name is Greta Rivero, and I'm the Director of Grants and Programs for the Greater Washington Hispanic Chamber of Commerce Foundation. With me today, I have Veronica Cordova, the Grants and Programs Manager, and we have a special guest here that's observing, our President and CEO, Nicole Quiroga. I really want to thank the Department of Housing and Community Development and our other partners such as the Small Business Administration, because without them, this workshop series probably wouldn't even exist, thanks to Roderick Johnson over here on the panel. He's our lender relations person through the SBA. Roderick, do you want to say a few words before we kick this off?
Yes, so good morning, everyone. I am glad to be on again, and I want to give you some updates on PPP. And that is, we still have $100 billion left. So if you have not applied, please go to your local bank and apply. We are down to $50 billion for the EIDL program. But one update on the EIDL program, you no longer can get the advance and or grant because the $20 billion set aside for the advance/grant now has been all used as of last Saturday. But there's still money, $50 billion for you to get the loan from EIDL. Now, during this series, we've talked about things like your SWOT analysis, which is important, having realistic projections, having a net profit, because the only reason you're in business is to make net profits, okay? If you're not in business to make net profits, then go to work for someone else. You want to make money. That's why you're in business. And so now we're going to talk about, you've done those, what you consider realistic projections, but some things like COVID-19, right? A pandemic has happened. So now, in this session, we're going to talk about making corrections, or as they say, course corrections to those realistic projections that you've made. Some of the things you're going to have to consider is, now that I've received the PPP money and the EIDL money, once that's gone, how much cash now do I still have on hand? And now, will I be able to survive maybe the next 13 to 26 weeks, okay? And so it's important now to really go back and look at your projections and make some corrections to what your original assumptions were. So with that, I'm going to turn it over to Manny and Grizel, and you guys take it away.
All right, thank you.
All right, yes, that is very true. So what I'm going to do this morning, and Grisel's definitely, like I said, feel free to chime in. I'm actually going to give you guys two little presentations, which are going to feed off each other. But it's all going to be around projections and using your projections and making sure that they're still in alignment with what you need, and then how to actually update those projections. So as Roderick said, if you get something like a PPP loan or any other finance, if you get any other loan, you can think about how that's going to change your business and how you're going to adapt your business to be able to use those funds. So to recap, last week, 2 days ago, it feels like last week. I went through financial projections. I know that was a very heavy subject. I went through it very fast. Like I said, that's typically like an 8-hour workshop where you actually get in, get your hands dirty, you actually start working with your data, and you really think about what you want to do. I went very fast through that process because I wanted you all just to get an understanding of the thinking that you need to start having in order to create financial projections. Very, very, very important in your business. Having a set of financial projections, again, is like a roadmap, okay? It's a roadmap in how you're going to build your business. If you don't know what you're aiming for, if you don't have that end goal in mind, then you don't know the resources you need to build your business, and then you ultimately won't get there. So having that roadmap is so super important. And everything we've talked about in the last 3 sessions was all about that. It starts with your personal goals, building your business plan, doing your SWOT analysis, and building your financial projections. So now we're going to bring that all together, and again, really focusing on those projections to figure out how you're going to make your business do what you want it to do. So with that, let me throw my presentation back up here. Quick second. So I'm going to talk about this in the context of aligning your personal and business goals. Again, as a small business owner, or even if you run a nonprofit, you know, this is all about you and what you need out of your business or your organization. So I always like to bring the conversation back to you, the person. If you think about just growing the business and don't connect it to you as a person, you're ultimately not going to get what you want out of it. You're going to feel frustrated. And that's, in my opinion, why a lot of small businesses fail. They're just not aligned properly. So this is all about doing your business plan, building your projections, and then aligning and constantly going back and realigning your business to your personal goals to make sure that it's always hitting that, okay? So that's what we're going to talk about here, that realignment. And I do recommend, so I have a whole, I have a whole toolkit that I've created that teaches people how to think critically about their business from a financial standpoint. So this is one of the exercises actually in my toolkit. And I recommend you do this particular exercise at least once every 6 months, okay? It's very, very important, especially as a small business, every 6 months to stop and just rethink about your business. Is it going in the right direction? Do I have new personal goals and whatnot? And then realigning. Okay, so this, what I'm about to go through, you should do at least once every 6 months. Okay. So again, one of the purposes of your business should be to provide you with the income that you need to meet your personal financial goals. Your business can be a lot of things to you. It can be a sense of personal fulfillment, maybe creatively, something like that. But very much so, it should also bring you the income that you need. All right. So the business, especially as a small business owner, should be able to provide you with the income you need today. But maybe you're not there yet. Okay. So in fact, if you're running a small but growing business or a nonprofit, then the odds probably are that your business is not able to provide you with the income today that you ultimately want. All right. So that's actually okay. And it's quite normal. The key is that we want to start positioning our business so that it can provide us with that income that we want, at least in the near future. And we start getting a sense as to when that's going to happen so we can set expectations for ourselves. So you want to understand when and how it will provide the income to you. And then what you want to do is, after you create that initial set of projections, then you want to constantly make sure that it's on track so that it can fulfill what you want. It can fulfill your expectations. And it helps you keep that top of your mind. That's the responsibility of your business, is to provide you with this. And so you always want to keep that top of mind. And so that's what we need to do on a regular and consistent basis. So every few months, you need to do a sanity check, basically, to make sure that your business is still on track to meet your personal goals. This is something that you should be doing, again, on a regular basis as part of what I call a diagnostic. So I like to say, think of if you have a car. I know some of us in DC don't have a car, but if you do have a car, you have to bring it into the mechanic every few months, every few years, whatever, to get a checkup, right? They go through a whole, if you bring it to like a Jiffy Lube, they go through a whole diagnostic series, checking little aspects of the car. They do that to make sure that the car is working properly and it's going to get you what you want. Same thing with your business. You have to do a periodic diagnostic on your business to make sure that you're on track, that it's going to be the vehicle, literally, that you need to bring you what you want. Okay. So
Manny, if I could just jump in for 1 second, do you mind? Because we spent a lot of time in the first 2 sessions on the business plan. And as Manny was saying, that's part of the checkup. So your business plan should almost be like, it's a sacred document and you should be following it. It shouldn't be like your New Year's resolution on your diet, right? You do your New Year's resolution on January 1st, and by January 5th, you're thinking, oh, I'll start next year. So this is a really good time for you to revisit that business plan, because part of that plan was to set those goals, those 6 months, 3 years, and 5 years. So if you're not profitable in the beginning, Did you have enough capital to work with so that it can see you through those 6 months? And then you're onward and upward to your 5-year projections. So this is a really good time when you're doing this am I on track, is go back to your business plan, because that was your framework, that was your foundation and your skeleton from which to put some meat on those bones. So sorry, but I just wanted to remind them, get back to your business plan.
Exactly. Well, and I'll share, I actually, every quarter, I actually go back to the business plan. So I update mine on a quarterly basis. It's part of my, I like to stop, assess, where am I, and then set my quarterly objectives for the next quarter. So, every quarter I have a goal of doing 3 major projects in my business. And this helps me kind of figure out where I need to be. But I absolutely look at the projections to see where I'm at. Am I meeting my goals? And that gives me a lot of clues as to, oh, this is what I need to work on in the business. So, yeah. So what we want to do is I use a 3-step methodology in order to do this checkup, at least from a financial standpoint. Okay. So the first step you want to do is to look at and update your personal financial goals. Okay. Because again, if you don't know what you want personally, how are you going to have your business get there, right? So that's step 1. Step 2 is to review and revise your business's financial projections, okay? And the third step is to then make adjustments to the business as dictated by the projections, so you make sure you ultimately hit those goals that you want, okay? So let's dive into each one of these steps in more detail this morning. All right. So the first step is to update your personal financial goals. So this, of course, assumes that you have created personal financial goals for yourself. And if you haven't, I definitely recommend that you take a step back and create your personal financial goals. Obviously, reach out to someone like Griselle or a personal financial planner maybe that you rely on, but make sure that you set those goals, okay? Now, just like with the business plan, your personal goals, it's not something you create once and then they're just there for the rest of your life. I don't know anyone, hopefully, who just kind of sets one goal at age 20 and then that's just their goal for the rest of their life, right? We're changing as people all the time. So your personal financial goals will be changing constantly over time. The goals that you create today are probably going to be different than the ones you wrote down a year ago, right? Maybe you get married, maybe you have a baby, child's going to college, aging parents, right? Things like that. So your goals are going to constantly be changing. So you need to take time to reflect on the goals that were set and then update them for your new wants and your new needs based on your new reality, okay? So, for example, okay, how much money do you need on a monthly basis to cover your essential bills? Okay, how about for entertainment, like going out to movies or dinner with friends, which I know we're not doing much of now, but see, here we go, right? Maybe at the beginning of the year, you had some goals around that. Obviously, those got curtailed, but maybe now as the next 6 months is coming up, we can start doing some of that more. So you need to start thinking about that. How much money do you need for there? Okay, how about paying off student loans or maybe any other debt that you're going for? Maybe you're buying a home, for example. What do you need to put into your retirement account? All right. What about saving for aging parents' medical bills? My parents are getting older, so that's definitely something that's starting to become top of mind for me is, do I have money set aside to be able to help them with their medical bills as they grow older and maybe even moving into assisted living facilities and whatnot? Okay, my parents aren't that old yet, but some point soon they're going to start getting there. So they'd kill me if they heard that. But how about a dream vacation or a second home? Okay, so these are some examples of goals that you need to start thinking about. You need to start thinking about how much money you need in order to achieve these goals, okay, personally. So these are great questions to explore with your personal financial planner. So these are experts in helping you decide what you need in all aspects of your life. So I do highly recommend seeking out a reputable financial planner and then building a relationship with them. Griselle, I'm sure, can certainly help in this area, help you wrap your mind around what you need around that. So I do have a little worksheet here, but I know you're actually going to send out yours, so I'm sure yours is so much better. But it was just an idea of, I love my Excel spreadsheets. So it was just an idea of like, look, here's, you know, if you look at the spreadsheet, here's my income. This is how much income I bring in. And we break it down by month. All right. Because it helps you to think about this monthly. Here's how much income I bring every month. Here, maybe some regular wages I get or regular income I get, and then maybe some one-time income. So like if I get a bonus, maybe I get a gift or a windfall tax refund, right? This is how much I expect to get in. So this is almost like a financial projection for yourself personally, right? And then you have your expenses, the amount of money you're spending, and we split that into necessary things and then sort of like fun things or unnecessary things, but you just spend money on. So like, you know, your rent, mortgage, things like that, and then fun things like entertainment and whatnot. And then we also have some, maybe some one-time things that we put in there. And that just starts giving you an idea as to, this is how much money I bring in, this is how much I spend. So, you know, am I positive or negative? And that will tell you how much your business needs to bring in. So for me, you know, my business is my income. So if I know I spend, you know, $5,000 a month in expenses, I wish it's actually a lot more than that. I won't tell you how much, but you know, if I spend so much money a month, I know my business needs to bring in that much money so I can cover all that. Okay. So this helps you start to wrap your mind around that. All right. So that now brings us to step 2, which is the business projections, right? So now we need to update and examine our business's financial projections. So remember that the projections is a roadmap to how your business will be growing over the next 12 to 24 months. How much revenue can you achieve? What are the resources that you need to achieve those numbers? Okay, it also gives you an indication as to how much you can pay yourself. So if you're a business owner, most of the profit of the business, it will essentially be paid over to you. So you definitely want to have a clear picture as to what that's going to look like over time. And again, this does apply for both for-profits and nonprofits, because it's true that while nonprofits have some more restrictions on their profit, the same principles and methodology can be used here to make sure that you can see how much you can pay yourself as an executive director and whatnot, okay? So to update your financial projections, of course, you need to start with financial projections. So as I went over it last time, that's how you create your financial projections. So hopefully you all have an understanding as to how that process works. If you don't, feel free to reach out. It can definitely help you get your financial projections set up there. So now what you do is compare your personal financial goals with the results predicted in your financial projections. Do they align with one another? So, for example, if you determine that you need to pay yourself $20,000 a month in order to achieve all your goals, does your business's projections show that you'll be able to pay yourself this amount of money every month? That's the big question. If they do, if your projections say, yeah, you'll be able to pay yourself this much or maybe even more, then great, congratulations, your business and your personal financials are aligned. Now, the point is to make sure that your business is moving in the right direction to meet all your personal wants and needs. So it does not necessarily mean it has to do this today. So don't freak out, don't worry if your business is not showing that you're going to be able to do this. As I said, it's hard for a small business, especially when you're starting out, to have your business meet all your personal financial needs. That's not the point. The point is that we want to start getting clarity as to how to get it to do it and when it will start doing that. So as long as your projections can show that it will be able to start to align maybe a few months down the road, then you're on the right track, okay? So does that, hopefully that makes sense. I don't know, Griselle, if you wanted to jump in there and say anything about that, because that's a common feeling that people have.
Yeah, and I think you touched upon that last session, is having a time frame. So again, when you start out, you know, you're not going to be cash flush in the beginning, but you should have, and there are metrics that should be set at every point so that you can reach to your long-term goal. Because remember what we've been saying for the last 3 sessions is, you know, success is the ability to sustain profits year after year. And in this case, month after month. So unless you have something to peg to, unless you have that small incremental goal, end of the year is going to come around, or not even end of the year. You know, if you're barely paying all your expenses, that there's a disconnect. And then at that point, then we have a conversation. Is this worth continuing to do? Is my business viable, or do I need to go into something else? So it's good to have the long-term projections as long as they have a time attached to it. Because otherwise it's just a wish plan, right? It's just another, let's hope that this happens and close our eyes and work really hard and get there. And it's just not going to happen.
Exactly. And vice versa, the projections can help you come up with that timeline as well. So
exactly,
you all work together. Exactly.
Totally aligned.
Yes, they're totally aligned. Exactly. That's the point. So what happens if the projection, so if you're in that situation and maybe, hey, this is not aligning here, what I want personally, I don't know if my business can get me there, right? So if they're not aligning, then you have to really adjust everything. So you either have to revise your personal goals, which we don't want you to do, or you have to revise the trajectory of your business. So again, I would not personally adjust my personal goals. I say you're allowed to dream as big as you want, and you're allowed to get anything you want out of this life. You only have one life, so you have to make it count. So I don't want you to adjust your personal goals. I want you to adjust your business so that your business molds to what you want and you can get everything out of it. And trust me, you can do it, I promise. That's what us professionals are here to help you do, is to figure out how to get it to do that. All right. So how do you realign? Start playing around with different projection scenarios that you created and see what you need to do to change the results of the business. So if you remember last week, 2 days ago, that one of the second to last step was create scenarios. So you create your basic set of projections, which is your most likely scenario, but then you create a best case and a worst case scenario. Okay, and you may want to create more scenarios than that, right, with different assumptions. So start playing around with those assumptions to see, well, what if I change something in my business? Would that give me a different result, right? So what if you increase prices, right? Maybe I'm not getting everything out of there. What if I increase my price by 1%? What would that look like? You'd be surprised, by the way, a 1% change, there's been a lot of studies done about this. A 1% change in your business actually has a multiplier effect throughout your entire business. So 1% change in your prices, for example, can actually result in a 10% increase to your bottom line. So it's really quite fascinating when you start playing around with the numbers and start playing around with that, how much of a change you can make with just a really small, tiny adjustment. So what if I increase my prices? What if I change my product mix to focus on a higher higher profit product? What if I decrease some of my expenses? What if I increase my labor efficiency, right? Maybe my people are working just a little bit more efficiently. Okay, I can squeeze more profit out of that. So this is where a CFO can play a vital role in helping you think through the changes that you can make to realign your business so that it's helping you achieve not only the goals for the business, but your goals personally, okay? So that brings us to step 3, okay? So if your business and personal goals are aligned, then you're done. It's time to celebrate. So there's a little pineapple there celebrating, right? Okay. But if you had to make some adjustments, then, well, you got to go back to work, okay? You got to go back to work, figure out what those adjustments are, and then go to work making all those adjustments, okay? So again, you can leverage your CFO or a coach to help you create a concrete plan to implement the changes that you need. So maybe you need to hire new team members. Okay, we'll figure out how to do that. Maybe you need to get a loan, right? So we need to figure out how much cash you need to make all this happen. Maybe you need to figure out how much to increase your prices by, and then how you're going to roll that out to your customers, okay? So once you implement the changes, then don't forget to update your projections based on the changes and then reassess how that's happening. So like I said, you probably want to do this exercise every 6 months, but if you're going to be making changes, you want to then update the projections much more faster than that, just to make sure that it actually is going to get you to where you want to be, all right? And then now, once you update the projections and you validate, okay, yes, this is working, it's going to be back, now you can celebrate. Now you can be that pineapple, right? And have fun there, all right. But your work is not done. So this process repeats over and over again, okay? This is not, again, a one-time thing. over and over again, at least every 6 months. You have to keep tabs on how you're doing as you move through time. Are you staying on course? Are you deviating from the path you set? Okay. If you are deviating, you get back on track. So again, I recommend doing this exercise every few months, 6 months, maybe something like that. I do it personally quarterly. But by doing that, you'll make sure that your business is constantly on track to helping you achieve your personal financial goals. And then all that hard work that you're doing with your business, it's going to pay off, and you're going to have fun with your business, and you're going to really love your business because it's doing for you what it needs to do for you. Okay. So I'm going to now switch over to a second presentation, which I'm going to talk a little bit more about how to update those business projections specifically. But in the meantime, I'm going to see if there's any questions that arose.
Manny, I just wanted to add one thing as you transition to the new presentation. And we talked a little bit about this before, but in terms of your business, because this is what we're looking at is ways to make corrections, particularly in this time frame and this new world that we're in. And part of that is having ancillary products. So if you have a product maybe that isn't quite hitting the mark, right? I think I use the example, you wouldn't be renting a convertible in North Dakota in the winter, right? So part of shifting that mindset is looking for another product that will complement what you're doing. So here's an example. Everybody's heard of Zillow, right? If you're renting or buying a house, right? So Zillow has got this great big platform. They also own another company called Loop. Now Loop services the agents that work within Zillow. So here's a company that can generate income both ways from the both users, right? From the agents and from the people that are buying and selling. So here's a company that thought, how can I cover the entire market? So basically they're still in the housing market, but one is speaking to the professionals and the other is speaking to buyers and sellers. So if you scale that down to your business, what is it that you can do to offer complementary services? And if you are not at that, if you're not able to, then who can you partner with so that you can offer, and then you can combine that so that it's a win-win for both. So part of that, making those corrections is really to have those, and I talk about it over and over again, multiple streams of income and complementary services. So services that complement each other. So you have the same demographic, they're going to need it either on the one end or the other. So just kind of keep that in mind as you're revamping the projections and as you're making those corrections. Instead of making left or right, there's a way that you can stay straight if you have that support.
Absolutely. Yeah, I'm a big proponent. I've been talking a lot over these last few months about diversifying your revenue and creating multiple revenue streams. That is so super important. If you only sell one thing, you're going to be in trouble. So that's a whole other conversation. Definitely happy to have it. And actually what I have around, because it's so super important to do. All right, well, let's talk about a little bit specifically about how to update your financial projections. So we talked about the importance of financial projections and aligning them with your business. Now let's talk about how to actually do it. Okay, so now updating your financial projections, I do recommend you do this monthly. So you should at least go in and update your projections monthly. And then every 6 months is when you want to do that double check with your personal, make sure you're in line and whatnot. But you should always be updating your projections anyways on a regular basis. Okay. So hopefully you can catch stuff a lot faster. So it's important to review your financial results at the end of every month and update your financial projections. At the end of every month, you review your financial statements to see what's going on in your business, and then you update your projections accordingly, okay? So why is it so important? Well, we just went through all that, but I'll tell you again. So small businesses and nonprofits can change very quickly, in case you didn't notice that. Things change really fast when it comes to us. So keeping on top of the latest and greatest information is so super important to your success. After reviewing your financials and updating your projections, again, you may realize that you're off course, right? So you want to be able to catch that right away and do that course correction. Spotting trouble areas coming down the road, like low or negative cash balances, for example, are extremely important to catch early on so you can take action and then find the resources that you need, like maybe getting a loan, things like that. Okay, so you have to do this stuff on a regular basis. So you do this by doing two major things. First thing you do is review your financial statements for errors, really. and then taking that information to update your financial projections. So hopefully you all are up to date on your bookkeeping so that we can do this. So before we can do anything with our projections, we need to make sure that our financial statements are accurate. Remember, garbage in equals garbage out, right? So even if you have a bookkeeper doing your books, it's important that you personally still look over everything to make sure that things aren't wrong, okay? I hate to tell you, but bookkeepers are not mind readers. You know, I've been doing bookkeeping for over 20 years, and sometimes I don't know what's going on in the business, right? You do as a business owner. So you have to make sure, now you don't have to become an expert in doing accounting or bookkeeping, but you do have to, you do have to understand your business, you do have to understand your numbers. And what you need to do is just make sure that it passes your, what we call our smell test, right? So you do a quick look at everything, and does this generally make sense to you? Does it make sense that, do these numbers make sense? And does something seem a little off? It's your business, so use your internal indication as to what you think the numbers should generally look like. And I promise you that you probably have some general ideas to what things should look like. And if something looks out of sorts, that's when you bring it to your bookkeeper to say, hey, I think something's wrong here. I'm not quite sure. Can you look into this? And then you can dig in there, okay? So what you want to do is make sure that everything is looking accurate, all right? So there are 3 things that you need to check in order to do that. What we call our suspense report, your balance sheet, and your income statement. So the first thing you want to do is review your suspense report. So if you're using a bookkeeper, they probably have something called a suspense account or something similar like that to capture transactions that are unknown or unfamiliar to them. Okay, so what you want to do is just look at that list to say, oh, I know what this is. Oh, this is what I did with this. This is what I spent the money on, right? And then you let them know, and then they go and update the transactions. It's important to do that because if a bunch of stuff is sitting in the suspense account, then your financial statements are not going to be accurate. You're not going to know how much money you actually spent on something or how much revenue you actually gained from a particular thing. So you have to make sure that that is constantly updated so you have real information that you can use. So that's the suspense account. Then you want to review your balance sheet next. Now, I know that for some of you, reading a financial statement is a little bit like reading Greek. Like, you don't know, what am I supposed to be looking at exactly, okay? This is what you use a financial statement for. A financial statement is really, in my opinion, management accountant here, is used to predict the future. A financial statement gives me information about my past so I can predict my future, okay? That's the purpose of a financial statement. It's really a tool to help you update your financial projections. If you do nothing else with your balance sheet and your income statement, use it for that. Use it as a tool to help you update your projections, okay? So what you need to do when you look at your balance sheet is, I just want you at this point to look for errors in it, okay? Then we'll talk about how to use it. So you need to look for errors. So some common errors in a balance sheet can be if it's showing a negative cash balance, if it's showing a negative receivables balance, a negative payables balance, things like that, okay? So if you see something like that, then again, you want to bring it to the attention of your bookkeeper and say, I don't know, something seems wrong here. Can you look into this and fix it, okay? You have to have strong, good, accurate information. So for example, if you look here, this is an example of a balance sheet. And you can see I circled some areas that just look a little weird to me, right? There's a negative cash balance. That's not right. Am I really overdrawn $91,000? You know, a negative receivables means that instead of someone owing me money, I owe them money. Is that really the case? I don't know. Right? I paycheck advances, kind of things like that. So you just want to look through this to make sure, does this seem right to me? Does these numbers make sense? All right. You also want to take a look at your receivables, just diving a little bit into that one. Do these numbers make sense? Do people actually owe me money, this much money? Or if it's a negative, that means, do I owe my customers money? Well, that doesn't make sense, right? Do I really owe my customer money back? Did they overpay me, right? That's weird. So you really want to just take a look as the owner of the business, just to make sure these things are good, okay? So you want to look at the balance sheet, and then you want to look at your income statement. So now the nice thing is, if you look at your balance sheet, a lot of times it will actually correct any errors on your income statement because the balance sheet is close into. So you want to do the same thing. Pull the income statement and then look for any weird things that are going on. Is the income consistent month over month? Are things consistent? Are there fluctuations that you expected that you're not seeing? Do you think anything's missing in there? All right. So again, here's an example of an income statement, and you see design income. Well, how come I didn't report any income for 3 months? But I know I'm doing projects every month, right? That's weird. I don't have any cost of sales. Wow, I had a big legal expense there in December. Why did that jump all of a sudden, right? I'm missing rent. Why isn't that in there? So, right, so these are the things you want to be looking out for. Do these numbers make sense to me? Your job is not to fix them. It's just to alert your bookkeeper, hey, I need you to look into this and figure this out. So once you've double check your financials and say, okay, everything looks okay, now you can update your financial projections. Okay, again, you should update your projections every month to make sure that things are happening properly in your business, especially if you've had changes over the last few weeks, let's say, like right here in the middle of COVID, you want to be updating your projections on a much faster basis because things are happening very fast, consistently changing here. All right, so there are 2 steps here. You want to update your projections with actual. So someone asked the question last Tuesday, well, what do I do now with my projections? Do I update them with actuals? The answer is yes. You're going to take your projections and update them now with actual data, and then you're going to update your forecast, okay? So we made a bunch of assumptions, right? We thought this was what was going to happen. Now we actually have the results. Well, if you've done good bookkeeping, you have the actual results. So now you're going to literally override the information in your projections with actual data. You're going to pull your actual sales from QuickBooks. You're going to pull your actual revenue and actual expenses, your actual cash balance, okay? What did I actually end up with cash-wise at the end of the month? You're going to take all that from QuickBooks and pull that into your projections, okay? Now, after you do that, now your actual results may cause you to rethink some of your future projections. Maybe your sales came in stronger than you thought and you can increase your sales projections. That's a good thing, right? Maybe you had to hire a new employee and so your labor expenses increased suddenly, right? So you need to think about, this is what happened. Now, how's that going to affect the future? All right. So again, that's where a CFO, a coach, we can help you kind of analyze that and then figure out how to update your projections accordingly. All right. So for example, this is a set of projections that we created. What I do is color code it. So everything in red is what I project. And then my green is what actually did. So literally what I did was, here's my set of projections I created. And then every month that I've completed, I've actually just gone in and rewrote the numbers with the actual numbers. How many customers did I actually get? How much revenue did I actually get? Okay, things like that. You're just going to update them and then take a look and see, based on this, do any of my other assumptions need to change? That is so critically important, especially watching your cash balance at the very bottom. How is your cash going to change? All right. So by doing that, we now have an updated roadmap to your success, and you can make better decisions with your business. You can plan for the future and start gathering whatever resources you need to achieve your goals. So for example, I updated my projections. Now maybe I see a cash shortage coming down the road, okay? You need to know that right now so you can start planning. How are you gonna bridge that gap? How are you gonna bridge that deficit? This is why businesses fail, because they don't plan ahead. They don't see the issue coming down the road, and so they end up tripping into it, and then they end up closing, okay? Are you going to be able to pay yourself what you need, going back to your personal goals? If you can't, how are you going to change that? You're going to increase sales goals, increase your prices, things like that, okay? What resources do you need to do that? Are you going to have to hire staff because you're hitting your capacity, right? Every business has a capacity, especially in the service business. You know, my people produce revenue. So I need more people to produce more revenue. Otherwise I hit a cap, right? So if I want to make more money, I got to hire more people. That's kind of how it works. Okay, so when am I going to hit that cap? When do I need to hire? And do I need to get a loan in order to do that? What other trouble areas are you spotting? Okay, so again, you want to discuss that with your CFO coach to make sure that they're helping you think through all that and then making the necessary adjustments. And then again, I'm going to bring this up one more time, every single month, okay? Or at least every single quarter, every single 6 months. I like to be aggressive and do it every month, like I said. But you know, you want to go through this cycle here. Adjust your personal goals, adjust your business projections, okay? Maybe revise your business trajectory, realign your business, and then celebrate your success. Very important to celebrate your success here, but just make sure that your business is constantly tuned so that you're getting out of it what you need. All right. So again, if you need help from us, feel free to reach out. I know we're in the technical assistance program, so we can help you out there. I'm going to send out some information, I guess tomorrow maybe. I'll give everyone access to some tools there to help you all out. But I will turn it back over to Greta, I guess.
I'd just like to add one more thing, if I can. During the last 4 sessions, I think we've really been talking about, we haven't verbalized it, but we're really talking about is organization. And one of the biggest reasons that businesses do fail, particularly in the first 3 years, is because they're not organized. So what we suggest, again, as Manny was talking about, to revisit these things on a monthly or quarterly business, but look ahead. I work with businesses that get so bogged down in the moment, which, right, you're always taught, be in the moment, right? Take care of what you need to take care of, but they don't look ahead. So what oftentimes happens, they get a big order or they get a project, and they spend so much time on that order or project or whatever it is, that widget is. They finish that project and they didn't move ahead. They don't have another project on the horizon. So it's always good to know, to have those projections, to have those goals, to know what your next step is. So for example, I'm working on this now. What else do I have coming up? When I finish this project today at noon, Griselle, what else do you have coming up that is going to generate income for you? So having that organization, both short-term and long-term, is the key to sustainability, particularly in a market like we're at right now. So be vigilant and be organized. Some of you are thinking, I don't have, a coach right now, or I don't have a software program. Reach out to one of us that can help you. There's all kinds of things from QuickBooks to whatever that can get you started. So we're not suggesting that you have to be an expert in all of these things. You just have to know what you need. So right now, hopefully we're uncovering what you don't know. So now that you know, you can't unknow it. So, I need to do this. Okay, who can I reach out to that can give that? So you do what you do very well for your business. That's why you're in business. Don't try to do everything. That's pretty dangerous. So seek out mentors. We've talked about that before, and seek out help in these areas. But it all starts with you, your business plan. From there, you get your projections and so on and so forth. So if we can impress just one thing that you can take away from these 4 sessions, is that organization is going to be the key to your success. And when you go to people like Rod for money, you're going to be all your ducks are going to be in a row. You're going to present everything, boom, 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 and get what you need. And then we can all move on and live happily ever after. So
exactly.
Thank you, Griselle.
Yeah, I'll say that, I'm sure as most people feel about accounting, that's how I feel about marketing. Marketing is not my thing. And, but I do, as a business owner, I need to understand the basics of marketing. And more importantly, I need to understand what I need to get out of it, right?
Yeah.
I don't need to understand how an ad on Facebook works and how to set up an ad and all that. That's not my job. But I do need to understand the result I need from So it's just, as Griselle said, that's exactly right. You don't need to be able to do your books. You don't need to be able to set up your financial projections, but you do need to understand what you need to get out of it. That's what you need to understand.
Okay, so thank you, Manny and Griselle. I appreciate everything that you do. Roderick, you want to say anything else before we go?
I'm glad that everyone attended. And you got very good information from Manny and Griselle today. And I look forward to seeing you guys next week.
Thank you. Nicole, you want to say like 2 or 3 words before we wrap this up? I would love to hear you.
Oh, thank you. I was going to ask, I didn't want to keep anybody back, but I just you know, when we read those inspirational books, you know, that all kind of have similar information, I always find one or two pieces of nuggets that remind me how to do best practices. And I feel like this is what this is. It's a lot of information that some of us already kind of know, but we're reminded of the importance of the simple things like organization, like projecting the future. And it's just very inspirational the way that you all have presented it. It's a very person-friendly way, and you're very approachable with the approach. So I appreciate that. It's a lot of great information, good, strong reminders, and the connection that we're building with you is very important for our business owners. So I just want to say thank you to you for your time and attention, and for everyone attending. Please let us know how we can help you in the future. Thanks, guys.
Thank you, Nicole. All right, well, goodbye, everyone. I'm sad to let everyone go. All right, bye, everyone. Thank you.
Next week.
Bye.
Adios.
Bye, everyone.